Now let's continue to take a look at some of the movers. That there's lots of them. It's earnings season now. Diane King Hall, host of Morning Movers, is here, and there is some sense of normalcy when we just cover earnings and even have some good news from Johnson & Johnson.
Yeah, indeed. The stock is kind of range bound a little bit higher right now. It had been under pressure in the pre-market, and some of that has to do with worries about the impact of tariff policy and how that will impact pharmaceutical. But look, JNJ did beat expectations on both the top and bottom line. They reported adjusted EPS of $2.77 a share. Revenue increased 2.4% to nearly $22 billion. Both of those, again, beating expectations. In terms of their forecast, they've raised their guidance, their full-year operational sales forecast. They're raising that to $92 billion. They've maintained their full-year adjusted earnings outlook of 6.2%. That's growth at the midpoint that they're expecting. That, to them, reflects both the impact of acquisition, so that's also part of the reason they're boosting their forecast, the acquisition of intracellular therapies, and then, of course, they're adding Caplyta to its pipeline. That's that treatment for bipolar and depression. They do say even with that, and they've taken into account the effect of tariff costs and, challenges or potential exposure in the Forex market, and again, still boosting their operational sales forecast. They had strength in pharma and med tech, innovative medicine segment. They saw a 4.2% growth there. That was driven by oncology, immunology, neuroscience, and their cardiovascular drugs. MedTech sales rose 4.1%. That was thanks to both some acquisitions and some divestitures, so that contributed some growth there. They've had some regulatory wins. The FDA approved Tremifa, excuse me if I'm mispronouncing that. That's for the treatment of Crohn's disease. In Europe, they had an approval over there. It's a treatment for non-small cell lung cancer, so some wins there. Again, though, there are some tariff concerns that are kind of circulating around J&J. You've got just the uncertainty about pharma tariffs, what they will be. So that dampens investor sentiment a little bit. We know that President Trump has warned of some major levies to come there. They've had the U.S. has launched that drug import investigation this week. So the stock has faced some kind of pushback, but today they're managing to shake that off thanks to both their better than expected numbers and guidance, Nicole.
Yeah, I mean, pretty impressive. And by the way, Pfizer is up this week. I just checked on Pfizer because we had that news yesterday on the weight loss pill and them pulling that. Yeah. Today we're looking at Johnson & Johnson, and even though we're seeing a bit of a down arrow or back and forth, they did have a beat. They talked about sales going forward. The tariff costs, they're somewhat accounted for. I mean, it really brings a sense of normalcy, or at least optimism here. And they talked about the medical sales, the medicine sales rising, which you went through some of those, the tech sales. So overall, pretty good here for an old, great American company.
They did have some good numbers overall. So again, better than expected. It's nice to see the guidance, especially in the context of this earnings season when there's some concern about guidance and if some companies will do what Delta did and say pull full year guidance. They didn't do that. They did raise guidance. They do still have that talc lawsuit overhang that they've been trying to fight against. That's that long-running litigation about the baby powder there and if it contained asbestos. They've tried to do some maneuvering around that. Courts have rejected that. J&J is still fighting the lawsuits. They call them meritless.
Yeah. I was surprised to see immunology down 11% operation or 12%. Either way, down. And that's interesting because that's not where I expected to see some weakness. But they did also note they anticipate negative currency impacts for 2025. It'll be interesting to hear what the different companies say as we have the dollar on the move. I mean, usually when it's too big, they say they have currency headwinds. So it'll be interesting as it pulls back if they change the tune on that a bit. How about Albertsons here, which is looking down?
Yeah, it's got some weakness here. A lot of that has to do with guidance for Albertsons. In terms of how they performed in the trailing quarter, adjusted EPS 46 cents a share. That did beat estimates. Revenue $18.8 billion. That was a modest beat. So clean, but again, this is about what have you done for me lately or what will you do for me now? So in terms of same-store sales, they did increase 2.3%. Some of that has to do with the impact of pharmacy sales. So pharmacy shows that is a bright spot there. Shoppers essentially sticking to essentials there in terms of their guidance. They're guiding for fiscal year 2025 EPS guidance of between 203 to 216. That is below what the street is looking for. Street looking for 229. Same store sales guidance. They're expecting that to grow between 1.5% to 2.5%. To them, that is reflecting, kind of caution, but some potential cautious optimism because there is still growth projected, but the potential for consumer belt tightening, and we're seeing it play out there. And look, this may be a theme of winners and losers when consumers kind of pull back. They do have a leadership change in the road ahead. May 1st, Susan Morris takes over as CEO. They're describing this year as an investment year, and we know they're coming off the back of that failed merger with Kroger. So there's certainly some challenges facing Albertsons.
Glad they didn't change the dividend. They kept the quarterly dividend. That's always a sense of relief for investors. And the pharma business, I guess, was the bright spot, but as you noted, down here and under pressure today, down about 7%. And then there's General Motors. Not one, but two downgrades this morning.
I know, exactly. A pair of downgrades hitting GM. This is the latest, both from Barclays. One of those, Barclays downgrading GM to equal weight from overweight. So again, becoming less constructive on GM. Their new price target is $40 a share, so that suggests some more downside from here. Now, keep in mind, we had GM did stage an advance yesterday from that news from President Trump with regard to clearly trying to work with the auto sector. But Barclays, again, less constructive. They downgraded some names across the board, and their industry view on the sector overall is negative, even though they're equal weight on GM. They call this a, quote, highly challenging environment. They think the near-term investment case for autos is just increasingly difficult. The pressures, earnings pressure, consumer, how will the consumer hold up, and then just overall auto tech investment, it's just unclear. And they said auto tariffs, quote, are seemingly here to stay. Valuations, they don't believe, are pricing in full tariff risk. Deutsche Bank, some similar views. Their updated price target for GM is now $43 a share. They've downgraded it to a hold from a buy. This is what Deutsche Bank's saying at the core. Assuming these tariffs are truly permanent, GM will face structural challenges for years. Should the company decide to onshore, this will naturally lead to lower profitability and higher CapEx, and in turn, less free cash flow, Nicole.
Okay, and Barclays also has an equal weight on Ford at $8. So both Ford and GM equal weight there at Barclays. Diane King Hall, great to see you. Thank you so very much. Good names to take a look there. Johnson & Johnson, Albertsons, and General Motors.